Welcome back. Capitec has delivered double-digit profit growth with headline earnings jumping 36%. This was boosted by lower credit loss ratios and upbeat growth in non-lending income. We're now joined by the company's CEO, Gerrie Fourie, for further insight on the performance. Thank you so much for your time, Gerrie. A 36% climb in headline earnings, and the common question on everyone's lips is, how does Capitec keep on doing it?
Yeah, I think it's the focus on clients. I think where we're very proud of is, 5 years ago, we were purely a retail bank or personal bank offer. And we've changed that to a fully financial services offer, which includes now insurance, business banking, and all our value-added services plus Connect. And I think all of that combined has actually helped us to achieve these results. So for us, it's important, is to focus on the client and making certain that we deliver on the client needs.
And of course, one of the big pillars when it comes to the determination of the growth in your financial metrics is credit impairments. Let's actually talk about the credit supply and demand that we saw during the period. And I would imagine that it's more of a supply story than a demand story.
Yeah, I think, I've said it in August last year, I said it in our full results that we've pulled back given the economy and the uncertainty that was taking place. The last time we spoke about it was pre the elections. Nobody knew what's going to happen in the elections, and it came out very positive. So we cut back. Through the cycle, credit loss ratio is 8.5. We had 8.3, so in line with our expectations, and now we've started opening up given what's happening with inflation, interest rates, exchange rate, etc. So I think there's for sure potential in the credit space. So yeah, you just need to manage it properly.
Yeah, talk about that management, because obviously you started opening up, but how much can you open up? How are you actually managing that, considering the fact that we've just only gotten a 25 basis point hike, and you would imagine that there could be a lag in terms of how it actually filters through to the consumer?
Yeah, but I think you must look at the economy in totality when you open up, because we had load shedding. We had a lot of uncertainty about what's happening in the political arena. You had very high inflation. You had very high fuel prices, very high exchange rates. And all of that is starting to normalize. I think the lagging indicator is the interest rates. So if you look at that, everything is positive. So you need to look at, let's say, 3 to 4 to 5 years from now, and those signs are positive. I think the only uncertainty is what's happening in the Middle East. But otherwise, it's much better. If you look at 2 weeks ago, China had a stimulus package that they brought in. That's going to help our people that's exporting to China. So I think we're in a much better picture than what we were 3-4 months ago.
All right. Well, let's get into the business of banking, because of course that is one of your newer initiatives. Talk to me about the scalability that you did see during this period in that arena.
Well, our challenge is, if you put all new systems together, there's always a bit of glitches and things are not working 100%. So we went through a difficult patch in April, May, or March, April, May. But we've stabilized it. You can see in our client satisfaction scores, we had 95% in July and August. So we now believe we're ready to scale it. So there's going to be a big focus on growing it. And our first thing that we want to grow is on our merchant base. We've reduced the pricing on our merchant base. We had about 30,000 merchants. In September alone, we acquired another 10,000 merchants. So we're definitely going to focus on the merchant side first, and then on business banking in totality. So we believe there's scope, especially on the small SMEs and on the emerging market, and that's where we focus.
Yeah, we're talking about that thread of growth. There's also the geographic expansion, of course, where you did increase your stake in Everfin, that is now a subsidiary. How has that filtered through to Capitec's bottom line?
Yeah, I remember Everfin has been part of Capitec for 7 years. We had a 40% share. Now we've got a 98% share. Management has got the other 2%. So they contributed just over 60 million to the bottom line. So it's very early stages. But we see Everfin as a long-term growth perspective. So for us, it's not how much they contributed now, but what are they going to do 5, 6, 7 years from now? So how do you grow it from a 1 month lending business to providing full banking services and going into term loans, etc. So we will follow the same journey that we followed with Capitec. We will follow in Avafin.
Gerrie, talk to me about your technology investment drive, because there have been a lot of conversations on artificial intelligence and digital payments and the like. Talk to me about the muscle that you are putting into that investment.
Well, we said on technology and data, we've invested close to 7 billion in the last 5 years. We've appointed another 700 people, of which 300-400 of them was in the IT data space. So there's a tremendous focus on encouraging people to use electronic payments, because the moment we've got that payments, we've got data, and from the data you can use machine learning and AI to optimize. So the future is for sure in the data space. I've mentioned that we've got 2.5 trillion data points of our clients, and that's how do you optimize it and how do you create value for your client base. So that will be a big focus for us going forward, is to make certain that we use machine learning and AI to its full capacity.
Gerrie, just to wrap up the conversation, because one of the big things that investors are always keen to know is if Capitec can keep the momentum going into the next period. And I do understand that there are base effects in terms of this 36% growth in headline earnings from last year. So can this momentum be kept even with the base effects that do exist in this current period?
Yeah, the base effects that you referred to is last year, this time we only grew with 9%. Our cumulative growth over the last 10 years was around about 16, 17%. And that's the difference. But if you look at the last 6 months or the previous 6 months, we grew with 25%, now 36%. So if you take the 9% off, we're at 27, 28% growth. I think it's impossible to grow forever, ever at 25, 26%, but definitely in double-digit growth, especially with the economy that's better, I think it's possible.
All right. Well, thank you so much for your time and for your insights there on those numbers and the prospects for Capitec going forward. That was the CEO of Capitec, Gerrie Fourie.